Alrighty then, ladies and gentlemen, good morning. Good morning from the UK. My name is Chris Coney. I am the host of the Cryptoverse. I'm going to bring you some more news and commentary on Bitcoin, cryptocurrencies, and blockchains. Now, did you know crypto trading volume has hit an all-time high, apparently? So what we're going to do is first remind you that nothing I say in these videos is instructions to take action on your investments. It's just information that I'm presenting. I'm not a qualified financial advisor, just a crypto enthusiast with some information for you. So what I want to do, let's do some news first because it has a longer shelf life than the chart analysis. So let's have a look what we've got. Another thing I'll say is just remember that content creators are human beings. And when prices pump like they are doing, we tend to get excited and then we tend to lean towards more good news stories, which reinforces the excitement and on it goes. And that sort of coincides with what I've seen is a shift in what the media outlets are reporting. And the conspiracy theory there goes that the media outlets control the tone of the market in order to manipulate prices, but that's another ongoing debate. So I've got a Forbes article here. Let me move it over to the far left here. So this is very interesting. This, to me, is a simple but entirely plausible suggestion. The headline is, will Bitcoin reach $50,000 because of the great wealth transfer? And what this is talking about is over the coming decades, over the coming decades, it says in the coming years, but it's saying millennials are set to inherit the wealth of the baby boomer generation. And the millennials are much more likely to take that inheritance and move some of it into crypto. So let's get some hard numbers. $30 trillion in assets, right? From this wave of inheritance. That's what they're calling the great wealth transfer from baby boomers to millennials. And then let's say, like it says here, let's say if the average millennial in that space decides to invest 1% of their inheritance into crypto, that's $300 billion, which is the math that they've put in the article here. So that would be 30 trillion in assets, 1%, $300 billion going into crypto. Now remember, that wouldn't be just $300 billion being added to the crypto market cap, and that's since you can't buy the entire coin supply at the current spot price. So it's not just a linear progression. 300 billion in would probably 10 or 20x increase the market cap in crypto, right? So this is one of those undercurrents. This is one of these fundamental shifts that I think long-term investors benefit from knowing about, which is why I picked it out. So if the average millennial, well, we don't even have to say it that way around. We could say if amongst all these millennials, the average amount that they decide to invest is 1% of this 30 trillion, that's where the 300 billion comes from. So with what's the current crypto market cap? 172 billion. So, if we 10x that would be quite a bit, wouldn't it? So let me know what you think to that trend in the comments below. It's quite straightforward, entirely plausible. So let me know what you think. You might have already seen this next story too, which is the PayPal story. PayPal backs digital identity startup Cambridge blockchain. So apparently this is PayPal's first blockchain investment. Well, maybe it is, maybe it isn't. It's definitely the first one they've made public anyway. And they've invested in a blockchain identity solution. So I can't help but think that PayPal would probably launch their own stablecoin eventually, given the amount of fiat currency that they hold at any one time. But this is, it's an identity on the blockchain type of thing. So there's a universal database for identifying ourselves and whatever. So that's less important. The specifics of the project, the overarching news is that PayPal have stuck, was it $3.5 million? $3.5 million from into this Cambridge startup blockchain company for identity's sake. So that's that. Stories like this are good news because it's evidence that large banking companies and large fintech companies are warming to crypto and supporting it rather than working to actively block it. So that's really the fundamental takeaway that I got from this without delving into the specific details of the investment. On to the markets and the actual title of this episode, which is Crypto Trading Volume Hits All-Time High. I got tipped off by this article from News BTC, and then I straight away took that claim and started to investigate it myself. So let's have a look. CoinMarketCap's reporting 80 billion for the day, okay? But then if we go over to TradingView, remember there's this ticker symbol, total. So if you type that into TradingView, this is the ticker symbol. It's the ticker symbol that will allow you to chart the overall market cap for the whole crypto space. So, I mean, look at the last 2 days. So this is the market cap increasing on the candles. But if I maximize the volume, I mean, look at this. There's a significant increase in volume in the last 2 days, up to and around the $70 billion mark from a previous average of about 30 billion. That's a hell of an increase, right? 80 billion volume in the last 24 hours. So that's according to both TradingView and CoinMarketCap. Now, I know some of you are going to say this is more fake volume or fake data from the exchanges in order to turn the markets around by creating fake excitement. But there's no way to know either way, is there? I mean, the exchanges are centralized, most of them, and they report the data, right? And they don't have to be audited, do they? They don't have to be audited to see if they're providing truthful data. So there's no real way to know. Now, what you can do, though, is use CoinMarketCap, go to exchanges and look at adjusted volume. So if we do that, 24-hour adjusted volume, even the trustworthy exchanges are reporting big volume, like what we got here, 2.5 billion for Binance. I think Coinbase is on about 500 billion if we search for Coinbase. There you go, Coinbase Pro, adjusted volume 24 hours, it's 25th, so it's 487 billion for the day. Not bad. I mean, there's hundreds, like 100% increases here for some of these exchanges, definitely in the double digits, 50, 60, 70, 80% increases in volume by adjusted volume. So interesting stuff. I mean, what matters is that you can actually sell crypto at the prices that are being reported. So, you know, that's really what matters at the end of the day. Some slightly bad news about Coinbase, actually. Coinbase Pro, which I was using quite a bit as a fiat gateway on-ramp and off-ramp, because they didn't charge fees if you put limit orders in. Excuse me. They've now introduced fees for even limit orders. Look at this. So if it's less than $100,000 an order, then the maker fee, i.e. for limit orders, is now 0.15%. So, and then it goes down from there. So you need to be trading what, 50 to 100 million dollars in order for the fee to be zero. So that's a bit of a pain in the bum, isn't it? Very big pain in the bum. And it seems when they actually posted this on the 22nd of March, which is an odd timing given, you know, the volume increases and so on. Yeah, it's not sure what to say about that. Let me know what you think to that in the comments below. Coinbase have also revealed a bit of news about their insurance policies. Now, Coinbase, I know, isn't the most popular amongst hardcore crypto enthusiasts, but check this out. This is a Cointelegraph article. It says, Coinbase reveals hot wallet coverage of up to $225 million via Lloyd's of London broker. So they've got insurance for their hot wallet for 255. Well, there we go. That says reportedly covering 255, and the headline says 225. So not sure what that is. Anyway, insurance against them being hacked or blah blah blah. Right. This is interesting. This is mainly why I recommend Coinbase to people who are brand new to crypto. I recommend they get started with Coinbase for things like this. Interface is easy. People will be comfortable using it when I tell them, look, Coinbase has got insurance, you know, and that gives people confidence that they get from the old banking system. But it's a way of getting people who are risk averse into crypto, you know, which is a higher risk space. Now, also, Coinbase can lower their insurance premium, I thought, by continuing to improve their security, because what they're doing is they're basically moving their risk, their financial risk, from themselves to Lloyd's of London. Yeah, and then Lloyd's of London are being paid to take on that risk. So that if the Coinbase lost $255 million, it would come out of Lloyd's of London pocket rather than Coinbase. But for the users, they're insured and their money in the hot wallet is safe. So pretty good news. Now, there were some suggestions yesterday that I happen to agree with regards to the market movements. So let's move on to that. Let's go back here. Let's go back to the Bitcoin chart. So yeah, there were some suggestions yesterday about the price pumps and so on. Some of that I happen to agree with. So one of which is like when many traders and analysts are looking at the same breakout point, things like this tend to happen because it's price movement by consensus. So in this case, where we had the big pump yesterday, the big old yellow downtrend line, the bearish reversal line, that appeared on many analysts' charts, including mine, this is the one that many people were looking at. So when we broke out of it, I wasn't surprised that we took a bit of a pump. You know, for me, I mentioned this yesterday, on the 30th of March, once we closed slightly above the bearish downtrend line, that was when me and Tony, who's my sanity checker in the crypto investment space, we went in with some fiat, more than we normally would, just because that's our analysis, and also, you know, we were aware that lots of other people were looking at that. I mean, just an observation right now, we're setting some sort of high rejection prices here. Today we've got, you see the body of the candle's quite low down the range, so that's a pullback. That's a slightly bearish signal there from the market, which isn't a huge surprise. You know, if we pull back to the 200-day moving average or something, that wouldn't be catastrophic. Ethereum actually has now managed to beat its 90-day cycle high, which I didn't see yesterday. Oh dear. Since I wrote that in the notes, Ethereum is now pulled back under its 90-day cycle high because it's showing this. It's the formation of like an evening star pattern. So the yellow dotted line across my charts here is the highest price we got in the last 90-day cycle. Now, we have set a higher price than that because the high of today is pointing outside of it, but I always like to see a close outside of that in order for it to be confirmed. So I'm talking about a close above $167.32 for Ethereum. An example of insanity was Litecoin again. Let's put Litecoin on the... Jesus, look at this. Litecoin pumped yesterday, and it's done another bit of a pump today. It's shaped like most candles today with a bit of a head on it, but Litecoin's still halfway above its range for the day, so that's kind of good. For me, I'm looking at Litecoin maybe on its way to $94, which was its last major high that it set. And the other one I want to look at quickly is Cardano. Cardano against Tether. So we get it in US dollars. So this is interesting to me because we got, where were we at? About 9 cents right now. So Cardano's doing the same thing. It's getting stuck at 9 cents resistance. And what I'm looking at is 19 cents is sort of the target I'm looking at for Cardano. The only thing I can see in the way of 19 cents is the 10 cent mark. So if you're looking at this on the video, those are the two green horizontal dotted lines. The bottom one here, that's 10 cents. If we got above that, closed above it and tested it, the rest of it's pretty clear as far as I can see, to all the way to 19 cents. So that's a key point that I'm going to be looking at with Cardano. If it can get above 10 cents, I don't see any reason why it couldn't go to 19 cents. So that's just to be clear on that. And this is also based on the rally that we're experiencing continuing, because it needs that buy power. All right, finally, I'm going to be at Coinfest UK for the next few days if you want to come down to Manchester and hear some talks and whatnot. Other than that, that is all I've got for you today. So please like this video, subscribe if you're not already subscribed, and I would really appreciate if you could show some support to the Cryptoverse. If you go to the website, thecryptoverse.show, you can either click on the courses button and check out my formal online courses that are structured learning rather than YouTube videos that are sort of a bit random subjects. The courses are actually, step by step, one thing logically leading on to the other, and that helps me out a lot. The other thing on the Cryptoverse website is the support the show button, which will take you through to Patreon. There's many different packages that you can pledge financial support, and you get bonuses like you get to remove the ads, you get cryptocurrency rewards every day for being a audience member, and access to the private chat group. So it's not just donating money. You do actually get a whole bunch of membership benefits for just a few dollars a month. I very much appreciate that. Helped me out a lot. Excuse me, got croak on. But that's all I've got for you today. I'll be back with the next episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.